Welcome to the Techno Fundamental Report for October the 2nd. Let's take a step back in time and study some of the masters, the greatest, wisest investors of the 20s and the 30s. I've been studying Bernard Baruch, and he was quite a successful investor. By the time he was 30 years of age, he was incredibly successful. So he has 10 rules. Don't speculate unless you can make it a full-time job. The thing to understand is that these guys read the ticker tape, and they basically looked at every trade. It was a full-time, all-day, 24/7 type of situation. Beware of barbers, beauticians, waiters, of anyone bringing gifts of inside information or tips. Don't take tips, because the problem is you don't know when to sell a tip. Before you buy security, find out everything you can about the company, its management and competitors, its earnings and possibilities for growth. Don't try to buy at the bottom and sell at the top. This can be done except by liars. Learn how to take your losses quickly and cleanly. Don't expect to be right all the time. If you have made a mistake, cut your losses as quickly as possible. Don't buy too many different securities. Better to have only a few investments which can be watched. Warren Buffett says be a know-something investor. So if you have a 100-stock portfolio, it's next to impossible for the human brain to absorb on 100, but maybe on 8 to 10 you can absorb. Make a periodic reappraisal of all your investments to see whether changing developments have altered their prospects. I've always said about buy and hold, the problem with buy and hold is things change. Study your tax position to know when you can sell to greatest advantage. What we promote is something called a tax bank, because we know as we build a portfolio and build our positions, we're going to take some short-term losses along the way. So you build up a tax bank which you can use as a loss carry forward. Always keep a good part of your capital in cash reserve. Never invest all your funds. Put yourself in a comfortable position where you can sleep at night. Don't try to be a jack of all trades. Stick to the field you know best. But most importantly, don't speculate unless you can make it a full-time job. Now, Baruch was also known as the lone wolf, because he operated independently in the financial world, refusing to join another financial firm and instead building his own fortune as a speculator. Now remember this speculative approach. He identified as a speculator, a term derived from the Latin word speculare, meaning to observe, to see, not to gamble, emphasizing his belief in observation and independent judgment in the stock market. So Baruch is a very interesting man, and we'll continue to look at a few others. Richard Wyckoff. The tape reader's profit should develop naturally. He should buy or sell because it is the thing to do, not because he wants to make a profit or fears to make a loss. You have to read the tape and listen to what the market is saying about others, not what others are saying about the market. Have your own opinion. Again, Wyckoff says, treat investing as a business or don't do it at all. So he even suggested, setting up an LLC or a sub-S corporation and just making it a business. You really cannot get into this on a part-time basis. It's a big mistake. Gerald Loeb wrote the book Battle for Investment Survival. He basically says here, really top flight investors are no more frequent proportionally than capable Army generals, Navy admirals, doctors, scientists, lawyers, artists, composers, and musicians. This is a very specialized field. And basically, if you want to become an expert on fish, well, then you need to watch fish. So with the stock market, with the tape reading, you have to watch the stock market. So the masters are these guys: Jesse Livermore, Richard Wyckoff, Bernard Baruch. They all had similar strategies, and you may want to pause your video player just to read what goes on here. But, Livermore was very big on making a profit initially. When he bought a stock, he wanted to make money right away. And then he cut his losses very quickly. Wyckoff was more of into the overall market, where he studied cycles. And then Baruch was very much a fundamentalist. He studied these companies extensively. So if you think about the duties of a chief executive officer, let's say you're running a business. You have to oversee operations, you have to manage the finances, you have to navigate uncertainty, strategic agility and foresight, continuous learning, emotional intelligence, resilience, the ability to remain steady under pressure. All these guys, Elon Musk, Jack Welch, the founder of Amazon, Steve Jobs, Sam Walton, these guys ran businesses, and when it comes to the stock market, you have to think the same way. Confucius says, if you make a mistake and do not correct it, this is called a mistake. So what we are promoting is that when you start to invest in a stock, don't plow in. Take your time. Send out a reconnaissance flight. Send your scouts out. And there's ways to do that, which we call the 1% rule, which is where we'll put 1% in a portfolio to see if it's working out as a form of reconnaissance. Now, Buffett has come out lately and talks about his indicator, which is a stock valuation indicator, and it's basically saying that the stock market is way overvalued. So we all know that, and just be aware of what you're doing. Be very careful. So let's see what's going on here. NASDAQ continues in an uptrend, actually close to making a new high. Looks very positive. However, like I've said before, this is getting kind of long in the tooth, but it continues to stay in an uptrend, and you just have to take this a day at a time. S&P, same thing. Standard & Poor's 500 continues to be in an uptrend, actually making a new high today. The primary trend is up. Now remember, if the primary trend is up, there's a 75% chance you're going to make money in the market. If the primary trend is down, there's a 75% chance you're going to lose money. But right now, as of today, the primary trend is up. The aggression index continues to look incredibly strong, making a new high here. So we're comparing NASDAQ, which is technology, to consumer staples, which is toilet paper and ketchup and mustard and Campbell's soup, that kind of thing. But what it's saying is that the institutions are plowing into the technology stocks, and they're not being defensive. Now, on interest rates, we're seeing continued improvement here. Our power index continues to be below zero, which basically says the Fed's going to probably continue to lower rates. The new lows on the New York Stock Exchange continue to be well under control. Now, we had one little day here, but we're back under 40 a day, which means that, in other words, if you get into a really bad market, the sellers rule. And you can see back here, back when the market was making its low on April the 7th, the sellers were in control. But right now, the sellers are just not in control. They're quiet. Now, one group that is starting to look very interesting is the semiconductors. You can see here, nice base, and we got a breakout above that base on higher volume than the prior day. So the semiconductors are a good barometer for growth stocks, continues to look positive. So look, if you have any questions, please let me know. Thank you very much.